Cool, I shall get started. Kia ora everybody, welcome along to the Aotearoa Property Data Network webinar on natural perils to property. My name is Sam Keast. I work as a business intelligence specialist for Kaina Ora, and I will be your MC for the day. Let's see. Cool, we'll start with our opening karakia. Whaia, te mātauranga, kia marama, kia tupu, kia te ake, ngā whenua, ngā moana, ngā arawai, kia whai take, ngā mahi katoa, araha atu, araha mai, tātou ia tātou, tua te kupu, tua te mana, tua tu te whenua, pamie, kuie, taikia. It roughly translates to pursue knowledge for understanding, developing and caring for the lands, bodies of water and waterways, seek purpose in all that we do, let us show respect for each other, hold fast to our language, hold fast to our spiritual strengths, sustain the land, go and gather and go forwards together. Cool. So this is our agenda for the day. We've already covered a fair bit of the starting component of it. But you can see that we have two presentations upcoming from Caleb Dunne and Emma Vitz. And then towards the latter end of the webinar, they will both be joined by David Grubb and Jeremy Palmer for a live panel discussion. We have some housekeeping to do. For the duration of the webinar, your cameras and mics will remain disabled. If you do have any questions, pop them up in the chat bar. You should be able to see them there. And I think that will cover housekeeping for that front. Cool. So to start with, Caleb Dunne. Caleb Dunne is a principal advisor at Toka Tū Ake, which is the Earthquake Commission, and focusing on natural hazard risk reduction. He works to inform, enable, and guide decision-making that reduces exposure and vulnerability to natural hazard events, and ultimately to improve the lives of people in Aotearoa, New Zealand. Caleb will be talking about growing EQC's data capabilities, including the development of a national building data set. Caleb, over to you, mate.
Thanks, Sam. Thanks very much. Tēnā koutou katoa. I'm very excited to be joining you here today. Sam, you can hear and see me, right?
You've got the slides. I think I can unshare and you take over.
Yeah, perfect. In the meantime, yeah, Caleb Dunne Toku Ingoa, like Sam said, thanks. I am a principal advisor in risk reduction and resilience. Let's see if I can share my screen correctly at EQC Toka Tū Ake. And today I'm just going to share a bit about how we are increasingly using data to build the robust evidence base that empowers risk-informed decision-making. And before I jump in, I'll just mention I do have some slides in here on the severe weather events last year in case that's difficult for anyone online. Also, I show some examples of a development in communities that I suggest might not have been appropriate. That's not to blame councils or residents or developers or anyone. It's just pointing to a system that enables it as a whole. Most people know EQC Toka Tū Ake, like Sam said previously, the Earthquake Commission, for providing insurance cover to residential properties against a suite of natural hazards. So this includes covering building damage resulting from earthquakes, hydro or geothermal activity, landslides, volcanic activity, tsunami, or if any of those events lead to a fire. And we also cover land damage from all of those, as well as from storm or flood events. But aside from the insurance function, our organization also has several other groups helping to reduce the impacts of natural hazards on people and property. such as our loss modeling group, our organizational readiness group, and the resilience and research group where I sit. And in short, the resilience function within the Commission is trying to get at actually reducing the risk that we face from natural hazards, or better yet, avoiding them in the first place. Because we only need to remember back to last year to think about some seriously impressive tragic events across the North Island from severe weather. And as is maybe typical for events like these, questions inevitably arise after the fact about whether we should have known better beforehand or somehow been able to see this coming. Or at the very least, it can raise questions about the way things have been done up to that point. So in the aftermath of these events, my team was convinced there should have been some way to demonstrate that these impacts were far from unprecedented, to use the ubiquitous term now. So anyway, we started with some quite high-level exploratory work, just starting to overlay things like satellite imagery over time, our own insurance claims data, publicly available natural hazard exposure layers, and some building consent data. And to be frank, the answers or the results start to jump out at you quite quickly. So we can start with this really easy example. This is an area in Auckland back in 2008, and we can pay attention to these properties right here. They're not too big, and they're pretty well set back from, this is a cliff face along the beach, so they're pretty well set back from the cliff. But if we jump to 2012, we see a much larger development, and it's been pushed towards the cliff edge. And then again in 2012, if we pay attention to these properties on the sides and jump forward a further 4 years, we see that they've also been redeveloped, intensified, and pushed towards the edges of the properties. And one more, if we see this property, it's not that big and it's set back from the cliff edge, but then jump forward to 2022, again, much bigger property, much closer to the cliff edge. Now, this is a cliff. It's got great views in Auckland. I'm not faulting people for wanting to live there and enjoy it. Maybe this just seems par for the course. But if we start to then overlay the past insurance claims in the area, you suddenly see that just about every one of these homes has had a landslide-related claim going back several years. So can we really say that we're justified in building here, or are we just setting ourselves up for future stress? We can also jump to Hawke's Bay, where in 2012, we have the relatively small community of Aotearoa along the beach. The beach is just on the right side of this image. And over the next 10 years to 2022, Aotearoa adds quite a bit of more housing in the area. And again, this seems fine until you think that in 2021, the Hawke's Bay Regional Council released flood hazard mapping that pretty much covers most of the area that got developed between 2012 and 2022. And unfortunately, this was one of the areas that experienced significant flooding last year in Cyclone Gabrielle. So jumping back to the Auckland Cliffs again, we see this home in 2009, and it had a EQC claim for landslide damage. So it was subsequently moved, actually redeveloped on the same lot, and they moved this property, the house, away from the cliff edge. So we'd say that's a positive risk reduction intervention. They're mitigating the hazard, and it's quite a good outcome. But then just the next year in 2017, we can see the same property has been approved to subdivide, and the new developments are going to be pushed back towards the cliff edge, despite the recent insurance claim for the landslide. And this was also the same year that a neighboring property also made a landslide claim for damage for landslides. So by 2022, this is what you get. You get much more development on this one property, and most of it is pushed back towards this edge that we know has had landslide issues in the past. And in the meantime, Auckland Council puts out its coastal instability and erosion technical report, and you can pretty clearly see the properties we've been looking at are threatened under each of the climate change prediction models, and they're facing some level of coastal erosion or instability under all of them. And then it's no surprise then that in the events last year, we see these properties ending up with landslide damage. So not only have we been able to show that New Zealand is growing its liability to natural hazard impacts through increased development, it's doing so where the evidence exists already to tell us that we shouldn't be. And even now, we're still at risk of repeating these mistakes. It's become quite obvious in some cases where we've built in places not only of high risk, but high regret. That is, we should know better, but we're doing it anyway. So it might be easy to draw these conclusions if you're a relatively data savvy person or a professional and you know where to find these council GIS layers. But that's not the case for a lot of people who could still benefit from this kind of information. So in the interest of making this valuable information that's often buried in insurance claims more accessible and comprehensible to more parties, and again, to help build a robust evidence base for risk-informed decision-making, last year we released the Natural Hazards Portal. It's maybe the first big step we've taken in leveraging our claims data, and it's also delivering on a recommendation following the public inquiry into the Earthquake Commission following the Canterbury earthquake sequence. So this is live now. If you feel like going to have a play later, it's just naturalhazardsportal.govt.nz. I'm just going to run through some screen grabs quickly to show you what we have so far. So there are several information pages about the hazards we cover, as well as some information about natural hazard insurance. But by far the biggest function of the portal right now is the claims map. So this shows all settled EQ cover claims going back to 1997 and periodically updated to capture new claims. So I think the last update was earlier this month, for example. But you can filter by location, territorial boundary, suburb, or view what kind of event led to the claim. And if a property has a settled claim on the portal, you get these little dots, and you can also produce a small report that explains what that means and what the claim was for. But also what to do next if you want to know more about it. So the portal can produce these little reports with more information and explaining what happened. And also importantly, where to go to find more, whether that's submitting an OIA request to the commission or just asking council what happened and looking for building consent data. A significant part of the portal for us was also removing the stigma that having a claim on your property was a bad thing. The dots on the property are hardly meant to be black marks, and instead we're aiming just to get people to think about and ask the right questions. So just, does your property have a past claim? If it does, what does that actually mean? What was the extent of damage? Was it repaired? Where can you go to find the answers to these questions? And we're targeting risk-informed decision-making. We aren't saying these properties have been damaged, don't live there. We're trying to get people to make their own decisions with the most complete evidence base they can get. Now, we'd like to grow the portal quite a bit further and its capabilities in the future, incorporating actual hazard exposure data and some kind of risk assessment function. And of course, getting to the so what of it all and guiding users through steps they can take, whether that's learning more or actively reducing their risk. The other major use of data that I mentioned earlier is our risk modeling. We have a dedicated team at the Commission that helps create a better picture of our actual hazard, exposure, vulnerability, and consequences from natural hazards. We rely on our own in-house modeling engine that was developed in partnership with GNS Science and NIWA here in New Zealand, but it's not dissimilar to RiskScape, if any of you are familiar with that engine. I'm not going to go into too much detail here, but as with all models, rubbish in, rubbish out. So as a result, we're constantly working to refine the underlying modules and increase their usability. So for example, with hazard data, that can include the recent 2022 update to the National Seismic Hazard Model. And we're also working on national models to capture volcanic, tsunami, and liquefaction hazards. And it's in this risk modeling focus on refining our models that we have come about to this National Building Dataset project. Now, the underlying premise here is that there's already property and building data out there. It just exists in so many different places in different formats with different level of accuracy. And we're aiming to create a single consistent data set that's usable by multiple stakeholders and agencies. The project is roughly split into two phases or two pieces of work, starting with what's already out there and then moving into gap filling and capturing new information. We want this to be a data set with a range of benefits to many other agencies and stakeholders. So we started with a workshop last year to determine what attributes are of interest and to what degree that data might already exist. And I'll just give a quick shout out to LINS and StatsNZ, who are major partners in this work. So the LINS building outlines is probably the most logical starting place here, but for our risk modeling at EQC, it leaves some gaps. So to start, the building outlines can be quite approximate in some locations, and it also has a tendency to overestimate the building platform by capturing things like decks or pergolas or patios. Additionally, EQC insurance policies are quite detailed in the extent of the land that they cover in an event, and it's based on distance of the land from the building outline, the building footprint. So the actual building footprint, like where the walls touch the ground, as opposed to the roof outline or the overhang, is what we really want to see here. And finally, our reinstatement cost models are also based on footprint area. So developing a building data set that captures footprint rather than roof outline gives us a much clearer picture of the contingent liability that we carry on behalf of the Crown. There are also some buildings that multiple buildings get aggregated into a single polygon due to their proximity to each other. And because the Earthquake Commission only provides insurance to residential structures, residential property, being able to delineate between these kinds of properties and structures would again help us understand our actual risk here. So, for example, this is Wellington. This is the Majestic Center in the middle left of the screen where I'm sitting right now. And with the National Building Database, we envision being able to pull up information like its height, number of floors, primary construction material, age, so on and so forth. That's the end goal. And as I said, we are exploring how best to build this data into something useful and cohesive. And that includes reaching out to the likes of Google or NASA and discussing some emerging technologies around building attribute capture, such as machine learning or new satellite imagery processing tools. That being said, if this has triggered any thoughts in the audience today and you're aware of some treasure trove of data sitting on a server somewhere, I would love to buy you a coffee and chat about it. So please feel free to reach out and get in touch if you're interested in the project at all. But I will otherwise stop it there and save some time for the discussion later. But just to tie it all back, we're trying to get at risk-informed decision-making, building the evidence base to let people make best decisions for themselves. That's what it all comes back to. So we can avoid seeing the same headlines in the next big event. We see less disruption to communities, better outcomes for people. So I look forward to any questions you may have in the panel discussion. But kia ora koutou. Over to you, Sam.
Nice work, Caleb. I'll just take back over there. Thank you. Yeah, great presentation. As you may have seen in the chat, and as Caleb mentioned, if you do have questions for him, we'll open the floor up for questions during the panel session. But for now, we'll move on to our next presenter. Bring this across. Cool. So our next presenter is Emma Vitz, who is an actuarial consultant with Finity Consulting, who advises insurers and banks on natural perils and climate risk assessment in New Zealand and Australia. She regularly engages with the media on those topics. And following Cyclone Gabrielle and the Auckland floods, she appeared on Q&A New Zealand and Radio New Zealand to discuss the impact that those events would have on insurance affordability and availability. So today, Emma will be talking about the impact of riverine and coastal flood on the insurance sector in New Zealand. Take it away, Emma.
Thank you. Thank you for having me, and I'm really looking forward to this discussion and then the panel as well. All right. I'll be discussing this issue from the perspective of someone who works in the insurance sector. So, as Sam mentioned, I am an actuary. I work in natural perils in New Zealand and Australia, and obviously, that's an area that has become really relevant over the last couple of years since we've seen those really big events. So insurance losses from perils such as flood and storm have been increasing for a number of years. So what we can see here is the historical home and contents catastrophe losses that the ICNZ has recorded going back to the 90s. Now, these numbers are adjusted for inflation and for population growth. And we can see that that trend has been increasing over time. And I'm sure many of you are quite familiar with some of the events that drove these increases. So you may remember, for example, the Nelson Tasman floods or the West Coast floods or the Auckland floods, which all contributed to that in 2021 and 2022. But of course, Cyclone Gabrielle and the Auckland floods really changed the game when it came to flood and storm in New Zealand. So we really needed a whole new axis on this graph and also a whole new way of thinking about these perils, where I think the insurance industry and also sort of the community has spent a lot of time focusing on earthquake, and this has pulled that focus back to other perils, which are also really important. So one of the things that is interesting is that the insurance industry is often asked to fulfill what can be competing objectives. So on the one hand, something that is expected of us from time to time, or something that we're asked to do from time to time, is act as a market signal of risk. So that means that people want insurance premiums to have some information contained within them about the level of risk that someone's taking on. So they want someone to be able to look at their premium and say, this tells me something about the risk that I'm taking on. At the same time, another expectation that is often had of the insurance industry is that premiums should remain affordable and insurance should remain available for as many people as possible. Now, both of those objectives make sense and they are important, but you can imagine that they're often competing, and insurance may not actually be the most effective way of achieving either of those things. So other important pieces of that puzzle include things like having publicly available information on things like flood risk that is consistent, up to date, and easy to understand. So that's kind of signaling the risk. And then in terms of the affordability and availability issue, it's really important that we think about these things when it comes to planning and land use, when it comes to building standards, and when it comes to adaptation and protection measures for communities that might be at risk. So when we think about managing this holistically, so not just from an insurance perspective, but across all of those functions, we really need to have a really informed and in-depth understanding of risk. Now, as Caleb alluded to, risk is not just about hazard. So hazard is sort of the process or the event that could lead to damage, but there are other contributing factors that also form part of the risk triangle, as we love a good triangle as actuaries. And those other two sides of the triangle are the vulnerability, so the susceptibility of an asset or a community to harm. So that can be anything from building characteristics to evacuation plans, and the exposure. So where do we build? Where are the assets, or where are the people, or where is whatever we're interested in? Now, insurers do spend a lot of time on hazard modelling, and Finity in particular partners with JBA to produce address level risk measures for fluvial and pluvial flood. So on the left, you can see an image of the West Coast flooding that occurred in 2021. And on the right, you can see some of the flood modelling, and you can see that there's sort of a relationship between where the deepest flood is in the photo and where we expect that to be based on modelling. And then when it comes to coastal inundation, we've recently partnered with NIWA to produce address level coastal inundation modelling. So this is an image of Nelson, which is where I grew up. And you can see in the pale blue is the council coastal inundation modelling for a ARI of 100 and a 50 centimetre sea level rise scenario. And then in the dark blue, you've got the NIWA modelling for a similar scenario. So what do we do with that hazard modelling once we've got that? So we extract the depth of floods under a range of ARIs and climate scenarios, And then we basically apply damage functions to understand how much damage a given depth causes. So on the left, you can see sort of some examples of damage functions that account for the fact that different types of assets are damaged in different ways at varying depths. So if you've got sort of an agricultural asset that's going to be damaged, you know, as soon as the water kind of hits those fields. But if you're looking at, for example, an industrial commercial building, it often takes much deeper flooding for that to happen. And then we turn that into a rate per dollar sum insured, which is sort of how that translates into premiums. But as Caleb alluded to, and as I mentioned earlier, hazard is only one side of the triangle, and we need to understand where properties are located, how they're built, and what they're made of. And this is an issue that I have run into many times, where the address and building data is sort of scattered across lots of different sources, and the quality of the coordinates can vary quite a lot. So these images are looking at Mapua, which again is in Nelson, an area that I know quite well, and we're looking at 1 in 500 year coastal inundation modelling. The image on the left, you can see that the black dot is the current address coordinate, but the red dot is actually where the building is, and you can see that that discrepancy of, you know, maybe 50 meters or so does actually lead to us not being able to identify that this property would be affected by coastal inundation. So it's really important that we have that really high quality exposure data so that our hazard models actually work as well as they could. So just to wrap up, Cyclone Gabrielle and the Auckland floods really fundamentally changed the way that New Zealand, not just the insurance industry, but also sort of the community thinks about flood and storm. And obviously that led to a lot of questions around, you know, what's the role of insurance? As I mentioned, sometimes those different roles are competing, and insurance is not always the most effective way to achieve those goals. So in order to manage that risk from, you know, sort of a holistic point of view, we need to not just understand hazard, but also exposure and vulnerability. And at this point in time, that's sometimes quite tricky. So I'm really looking forward to the work that Caleb is doing and making that a little bit easier for those of us working in the industry. All right, so I might hand over back to Sam.
Thank you, Emma. Let's bring this back up. Great presentation. Thank you very much for that. Now we've finished our 2 presentations for the webinar. The next step for us is a live panel discussion. So to kick this off, we, in addition to both Caleb and Emma, we're going to be joined by David Grubb and Jeremy Palmer, who will probably be turning their cameras on about now. David Grubb is the head of banking and valuation risk for Velocity, and he's one of New Zealand's most experienced valuation or registered valuers. This knowledge and expertise is leveraged into his current role with nearly 10 years of working with the independent valuation ordering process, which Velocity administers. David is a thought leader across multiple New Zealand property market verticals and regularly presents property-related insights to banks from a practical perspective. So welcome aboard, David.
Thanks, Sam.
And we also have Jeremy Palmer, who is our location information technology lead and property data lead at Toka Tū Ake, Land Information New Zealand. He first joined as a surveying graduate in the Office of the Surveyor General, and in his 23 years at LIMS, he's led and supported key projects, including the digitisation of survey data, establishing the LIMS data service, which I'm a big fan of. So thank you, Jeremy. Jeremy's new roles are charged with leading real change across the geospatial technology platforms and the property data that LIMS makes freely and publicly available through them. But I will hand over to Ben O'Reilly, who will be leading the panel discussion. So over to you, mate.
Hey, thanks, Sam. And thanks, Caleb and Emma, for your presentations in the first half. They were really, really fascinating. So yeah, as Sam said, I'll be chairing the panel today, and with our great range of experts from across multiple perspectives. So I'll start in the first few minutes just by hearing from David and Jeremy in turn. David, firstly, we've heard from EQC and we've heard from the insurance industry's perspective. Could you just quickly sketch out and give an overview of natural perils from the valuation and the banking industry perspective? How are they getting to grips with this problem?
Yeah, thanks, Ben. Welcome, everybody. I think there's quite a crossover with what we've been talking about today between the different parts of the industry. You know, Emma from the insurance, but banking is the same. You've got an asset at risk that effectively the banks end up owning the majority of a property. So if someone's got 80% lending, the bank is a bigger owner of that property than the actual person occupying it. So they have a real asset at risk. So they're very conscious of walking into something like that and being mindful of what they've got. So the situation at the moment is we provide the majority of the industry with data that they use in their back end. That's hazard data, flooding data, and the likes from various sources, and they look at their portfolio, so they can have a look at where they're at already, and they report that upstream to boards and off to the Reserve Bank and things like that. But at the end of the day, they're obviously interested in protecting the front end, and everyone's keen to be a first mover, but no one wants to be a first mover if you're going to end up in the paper on Saturday. So it's quite a delicate area, and one of the things with that, so obviously, Caleb's presentation with perhaps the democratizing of the data that's more visible to the public may be part of the solution for this, because at the moment, the data that we provide into the back end of the banks can't be displayed to the public. So it's all very well that the bank may have a view that a property may be subject to some form of hazard, but they can't show them why they think that. And imagine the situation where a bank says, look, we think there's a hazard here, and we're a little uncomfortable, we want you to do some more work, and they go back to the vendor of a property, and the vendor says my property doesn't flood, or it's like what Emma was showing before, where the actual improvements are nowhere near the flooding area of the property. So then there can be a dispute about it, and so where a bank may have said, oh, according to our data, there could be an issue. Again, they don't want to end up in the paper on a Saturday for information that can't be shared and validated. So that is the difficulty of the industry at the moment, of being able to everyone being fully informed and having visibility. So that's the challenge there.
Thank you. And Jeremy, so from a property information system infrastructure perspective, LINZ obviously has a role to play in helping to make that kind of data publicly available, along with partners such as EQC and others. In your new role as our technology lead and property data lead, how are you sort of seeing the road ahead for LINZ?
Yeah, thanks, Ben, and welcome everyone, and thanks for having me along this afternoon. Yeah, well, I mean, I just maybe raise it up a level. I mean, obviously, LINZ's role is, very much a geospatial agency, and we're really sort of here to try and provide better efficiency, decision making, and service delivery with the private sector and also government agencies. So, really see ourselves in that position to, to partner and collaborate with others to continue to evolve and create national infrastructure for New Zealand. And emergency management and the sort of resilience risks that we got here is definitely a key national problem, and we would certainly see that as something that we really need to get together with people in the community and work with. Just specifically, I mean, we really do have a vision that we want to try and create a single authoritative source of property information for New Zealand. And property information is definitely very, very broad, and there's a lot of data that falls into that domain. But, we definitely see that there's huge benefits in bringing together primarily a lot of stuff that's held within councils and central government, and integrating that together and providing that in an authoritative, open way that enables, good open access and interoperability and sharing innovation and basically transparent decision making. So that's really where I guess we see LINZ's role, and we're definitely keen to work with all partners to do that. We can't do it by ourselves. Obviously we do have responsibility for things such as addressing the title system, also the cadastral property boundaries and the valuation sales, and of course, was mentioned by Caleb, we do have interests as well in some elements of the broader property information, including buildings. But we definitely need to work together with others to bring that together. But I guess really at a vision level, we need to really look at trying to put platforms in place which are centralized, that bring this stuff together. The current system is very, very fragmented at the moment. And there's lots of access barriers, both commercially and also just because the systems aren't in place. Things are fragmented with roles and responsibilities, and it makes it very, very challenging for people to be able to get access to the information in a holistic way to make proper decision making. And then even if they can get access to it, because some of it has been put together because of inefficiencies across government and private sector companies have taken that role on, there become paywalls and commercial barriers behind that. That makes it very difficult for that information to be shared and transparently, I guess, scrutinised, and that's sort of what David was indicating in his little opening remarks there. So definitely we want to really bring it together and make it authoritative and open. There's a lot of challenges there, but we're up for that, and we're making progress, slow progress, but really want to try and drive towards that vision.
Thank you. And I can see there's a comment in the chat about how many different parties are doing flood modelling, and wondering why we can't just have a single authoritative source spending the money once and doing it right first time. And I guess that leads to another earlier question as well, for Emma and David. And we'll start with Emma first. How do you balance views of flooding hazard between conflicting data sets? How do you reconcile those conflicting models when you come across them?
I mean, obviously it's a case of understanding the models and sort of their limitations and strengths. So for example, a lot of councils sort of have high quality flood models for their particular area that might be better than something that is available for New Zealand as a whole because of the type of modelling that it is, but they only exist for Nelson or Tauranga or whatever, so they're not really feasible to roll out across the whole country. So in that case, what often happens is insurers will use the models that are sort of more complete in their coverage, but may make adjustments or turn to those council models when they want to understand the limitations behind what they're looking at. So that's sort of one scenario. I think that's probably the most common kind of main difference that we encounter.
And David, is that similar for what Velocity?
Yeah, so for the banking industry, it's very much, obviously the insurance industry, as I said before, is faced by similar challenges to the banking industry. So the way to navigate that has been or is developing all the time, and that is you can use the flooding model that I was talking about before that we have and then we provide into the banks, and that can allow the banks to be alerted to potential risk, and then at that point they can say, at the lending stage, they can say, we'd like some further investigation. And that's where you can then drill down, or a register valuer can then drill down into the local council mapping, which, we saw parts of Auckland that flooded were absolutely identified by Auckland Council as areas that would flood if the drain's blocked, which is exactly what happened. So it can be a first line of defense for the high level data that's available everywhere, and then you can drill down further. So I think that's probably quite a good way of going about it while we don't have that data set. Because like Emma said, there's various parts of New Zealand that have excellent data sets, but we can't gather together 67 councils of data set because some of them don't even have computers. That might be a bit harsh, but at the end of the day, they can't provide you with rates data electronically. How are they going to provide you with shape files electronically? So that's the challenge of the industry. Is it's all very well we could do components of it, but let's face it, residential lending's across New Zealand.
Okay. I think Caleb's presentation hinted at it a bit more, but maybe it comes to me to ask the question outright. Do you think the general public that are looking to buy property are as informed as they could be on the risks from natural perils?
I'll just take a stab at that. So part of the impetus for the natural hazards portal within my team, I think it was maybe a year or two before we really started working and developing it, is several people in my team were buying houses around the same time. And even so like I was saying, like data savvy, GIS savvy people who know that there are hazard layers out there were still having trouble finding the information they knew existed. So if you know that there's information out there and you know where to find it, and it's still hard for you to find it all in one comprehensive or understandable format, then yeah, what can you expect the sort of average homeowner or public to find? So that's part of the idea of pulling stuff together, like Jeremy was saying, like an authoritative centralized source that has it all and it's clear and you know what you can find and where to go for things. So yeah, absolutely.
So David, from the banking industry perspective, how those conversations unfold between banks and clients, or when your Velocity are working with your expert stakeholders to talk to bank managers around their lending decision making, how that must be a difficult conversation, yeah?
Yeah, so that's still emerging, and the banks are obviously very conscious of it. And I was saying before, everyone wants to be a first mover in the space, but don't want to make a misstep either. So it's we're in a delicate phase going forward because everyone's very keen to make progress on this. But just reverting back to what you mentioned before, Ben, is about how informed our purchasers. I think there's a strange phenomenon that you can the purchasers go to a property and they see a house and it's really nice on a sunny day, and they sign up for the property and they wrangle and they come to an agreement on a price, and then the next thing is it gets handed over to the lawyers and to the banking industry, and then they do the LIM, the land information search afterwards, and they might find out there's hazard layers. And I don't know if you've ever looked at one of these. All the people on this seminar have. But at the end of the day, it's just an information overload of these fancy coloured pictures, and they don't know what they're looking at. It's a bit like what Caleb said. He had people in the industry and they still couldn't necessarily find what they were looking for. So they don't actually necessarily understand that they might be buying a property that is subject to a hazard. So the banks are quite keen to help their customers understand the potential risk they may or may not be exposing themselves to, because the normal public aren't savvy at this. We've seen it on TV, but they don't know where those locations were because they're all nice and sunny and dry and burnt off again and things like that. And so they just don't know, and they make the agreement first, and then they can either walk it back a little or they can walk away, and that's human nature. They struggle to walk away, and so they're not well informed at the beginning. And that's why at the end of the day, sometimes the insurance companies and the banks can help their customers understand the risk. They're not necessarily saying yes or no, they're helping them manage that process and go in eyes wide open.
I might just add to that quickly. One thing that I often see is home buyers will sort of use insurance as like a check. So they might realize that the home that they're interested in is in a flood zone, for example, and then what I often see is people say, well, I can get insurance though, so it's fine. And I would caution against that way of sort of thinking. Obviously, that is an important thing to look at, but I think what people don't always realize is that insurance is a contract for 1 year. and the insurance company is not signing up for the next 30 years of your mortgage. Now, I'm not saying that insurance companies are inclined to withdraw coverage. That's not something they like to do. And it's very much a last resort thing. But I guess I would just point out that the premium that you're looking at today and the cover that you're getting today is for the next year. It's not something that you can rely on for the next 30 years.
And David, so that probably plays into the bank's decision making as well, right? Like they are signing up potentially to a 30-year mortgage term, and you need an insurance policy to be able to have a mortgage. And I guess they're seeing the spectre of potentially being left with properties 10, 15 years down the track that still have mortgages outstanding, but the insurance has to be withdrawn at some point or potentially.
Yeah, that's another whole challenge for the banking industry. When you take out your loan, you need to prove insurance. But in New Zealand, we don't have a very good mechanism for that ongoing proof of insurance. In Australia, I understand the banks have people sitting there ringing up people every single day saying you need to prove your insurance annually. In New Zealand, we don't.
I think there's a mixed bag on that front as well, to be honest with you. But
it doesn't go as
yes.
well as it did. Yeah. But you can see that at the end of the day, as Emma said, the insurance companies are signing up for a year, the banks are signing up for 25 or 30 years potentially. So their asset is enduring. And as I said before, they're actually the major shareholder in a lot of houses by the quantum of the loans.
Yeah. And just to, I guess, step back slightly in the whole process, so away from the vendor-buyer purchasing decision, back to planning, and Emma and Caleb, both your presentations hinted at this, and I think there's competing pressures of increasing risk versus a national housing crisis that we're all well aware of, and infrastructure crisis as well, where we've got a deficit in both. As we understand more about natural perils and map their geographic extents, it seems, this is my read of it, that there is often, the narrative is often seen that this is simply adding to supply constraints. It's just zoning off more places where we can't build houses, making it more difficult to build, either through zoning or through increased, spec requirements to do so, for flooding, more stormwater engineering and things like that. It all adds to the cost, makes building more complex and challenging. Caleb, do you think that's a fair assessment of sort of the general narrative to date through industry? And, are we thinking about that all wrong?
Yeah, it's a great question. Definitely a fair point to bring up, and like my team isn't so naive that to think that natural hazard consideration should trump everything else. And we realize there's housing pressures, and that has a daily tangible effect on people's lives. To again say what I've been saying, the risk-informed decision making, like if you find out you're in a flood plain, for example, like it's not necessary that you shouldn't build there. It's just that you need to take that into consideration when you build theirs, whether if that's raising your floor levels or something. Like there are steps you can take to mitigate the hazard and still live there, or even if it's just making sure people realize that they're buying a house in a floodplain and what that means for them. So yeah, it's just making sure that people are informed and they know what they're getting, and that we know what we're doing, and we're walking in with our eyes wide open.
And what is EQC learning from other countries with similar risk profiles? Is there cases of adaptation or mitigation done well, or are we sort of pushing the curve on this because of the pressures that we've got in New Zealand?
Yeah, we're a bit going back to what Emma was saying about how people kind of rely on insurance as the signal, maybe a bit too much. I'm from California in the US, and so that's what my head always goes to, because there's a similar sort of earthquake pressure there, and like hills, landslides, etc., wildfire pressures, and people similarly look to insurance as an indicator. But then at the same time, there's nothing like the Earthquake Commission in the States. There's no public safety net of insurance, so it's quite an interesting dynamic there. Yeah, and I also don't think there's quite the same like housing or infrastructure pressures in the US, but I think New Zealand is quite a well-informed population with regards to natural hazards, actually. So,
thank you. I just want to circle back to a question in the chat about how we're all coming at this from different angles, and there's multiple parties doing lots of modelling and adding to the narrative here. But the vision ultimately would be to have a single NZ authoritative open source asset data set for buildings and infrastructure that is open for all to use. But progress seems to be really slow. Jeremy, do you have a view on why that is and what perhaps can be done to start eating that elephant one bite at a time?
Yes, it's a really good question. I mean, there's definitely several factors and considerations why it's been quite slow. I'd say that, we can definitely point to limited resources. We certainly got, quite a few things on our portfolio to do, and increasing obligations being pushed on us. So trying to reuse existing resources to do, new things is quite difficult, and particularly in this context, because there's quite a few challenges there, both politically, technically, and in terms of the number of parties that are involved. And if you're talking about property information in a broader sense, the number of stakeholders or people that have actually got that information and the way that they manage it is very, very fragmented and across quite a few agencies, right? So the more, agencies and entities you have to involve to try and solve it, the more complex the problem becomes. So certainly that's a really key factor. And I think this environment is obviously changing, but definitely in the past, there hasn't really been a huge amount of political will to make huge changes in this area. It's not been a focus of past governments. So while we've been sort of stuck in this place pretty much since really moving into sort of the digital era, there hasn't been a huge sort of drive from the government, apart from the Land and Line Survey and Title Automation project, to really look at these big kind of centralisation projects. So we haven't had the political kind of backing. But as I said, I think that's changing, particularly because in this disaster resilience space, there's becoming a lot of really big issues for us. So it is gaining more traction there, but that's historically been an issue. And then really to navigate that because there's so many agencies and so many roles, there's a lot of bureaucracy and legislation and rules in place, which really do silo things off and make things very difficult for sort of a coalition of the willing to come together and actually just make this happen, because there's so many people in this environment that really see the problem and really want to do things, but there's sort of big barriers and challenges that sit there that need to be overcome. So, I mean, really the solution going forward is we need a top-down approach to solve this, because, we really need to get, sort of the government and ministers really wanting this and pushing this down so that this would happen across multiple agencies, and we could get basically the power to make the changes in the multiple avenues that we need. That's ultimately how I would see us trying to properly solve this. So yeah, we need to work on that story in that case, and to make that happen. Even though we're doing things, we've done a lot of great things in the past. We've opened up our information. We've obviously leveraged off the back of our survey and title system. We're actually trying to put together national sales and valuation data. We're looking at opportunities to invest in building registers and looking at other areas. That's all really great stuff, and we certainly shouldn't stop that. But I think to get the real step change that we want, I think it needs something top down.
Yeah, Ben, if I may just add to that, we insist that people wear seatbelts in cars. So we make them wear seatbelts in cars. People should wear seatbelts in cars. They shouldn't be made to wear seatbelts in cars. So taking that through to property, at the end of the day, people are building on floodplains. People are buying on floodplains. So maybe we have to help with the process at the front end and stop them exposing themselves to this risk or at least reduce it. Now, we're talking about the cost of this. I mean, at the end of the day, water goes downhill. We know water goes downhill, and so we can avoid those areas. We can let the water escape by volume, so we can actually build up into the higher positions quite easily, but the land's locked up. So we can unlock the land, and then you say, well, that costs more money to build on those sites because they're more elevated. We've got to put in more infrastructure, so that costs more for the section at the end. It doesn't. The section at the end is the section at the end. If it's a $500,000 section, it's a $500,000 section. The cost to get there needs to be deducted off that, and that's the price you pay for the block land. So the only thing that's compromised is the underlying price of the block land. Doesn't matter how much it costs to develop, as long as the cost is not more than the price you can sell it for at the end. That's how it works. So we can protect ourselves with some better planning, and the market will take care of itself as far as the cost goes.
Thanks, David, and thanks, Jeremy. I'm just conscious of time. We're 2 minutes to the hour, and we will just wrap up. Thank you, everyone, for your. I'll put a final question to the panel here, but before I do so, thank you, everyone, for your commentary in the chat, and I can see that people have been jumping in and answering, and there's been some good discussion in the chat itself. If we haven't been able to answer any of your questions in the chat, we will. We'll come back afterwards in the and send out some notes with answers to those questions that we haven't been able to answer live. But I'll just finish off otherwise with a final question to each of the panelists, and I'll start with Emma. If you could choose one improvement, or if there's one thing that keeps you up at night that you'd like to see fixed on natural perils to property, what would it be?
Yeah, I think it comes back to what I've said earlier, which is it would be incredibly useful to have a data set of addresses, buildings, the link between the two, that, you know, makes that side of things easier. I often feel like when you're doing this kind of work in New Zealand, it's all very artisanal. You sort of start by churning your own butter before you can kind of do anything else, and it would be really nice if we didn't have to do that.
Yeah, David.
Well, obviously, you know, Emma's stolen the thunder there. That's what we're all here today about, and Jeremy's going to solve all our problems, and that's fantastic. We just need to give him budget. I think the point I just made about let's protect ourselves from ourselves by not allowing us to expose ourselves to the risk as much as we do now, especially that example Caleb gave and Massey. I mean, that's, I think a lot of people will be pretty shocked with that. I would have thought a Section 36 certificate would have fixed that, Caleb, but anyway.
Caleb, and it might be the building information data set that EQC are working on, but yeah, otherwise, what would it be?
Yeah, I mean, it's definitely like some of us have been saying, a centralized source that sort of is, you know, the end all be all. Everyone knows where to go. But I think to get there, and the first step is breaking down some silos. I think as small as New Zealand is, it somehow finds a way to make things very, very complicated and create a lot of silos. So some way to break that down would solve a lot of problems, I think.
And Jeremy, last but not least.
Yeah, it's probably just going to be a lot of repetition, but I mean, definitely, as I said before, I think the thing that's dear to me and I'd really love to happen is for us to get that single authoritative source of property information to, you know, really unlock all these problems and challenges here. You know, so much time and effort and duplication has been done with data management and acquisition and cleaning and putting it together and trying to deal with all the data quality issues. That's just causing huge inefficiencies for the country. So if we can do that, and, you know, let's focus on the addressing and the, you know, survey and title and valuations and building information, and try and nail that, and then from there we can move on to the next kind of horizon.
Yeah, I think that's a logical way to go. Yeah, so thanks everyone. Thanks to my panelists. You've all been very informed and excellent today, especially Caleb and Emma with your two presentations to start. Thanks very much for your time, all of you. And thanks everyone for tuning in. It looks like we might need a follow-up webinar on this topic, but we'll endeavour to answer some questions in some following up notes along with the recording that gets made available shortly. yeah, we stay posted on our next webinar sometime in April or early May. And yeah, otherwise have a great long weekend for Easter and all the best. And Sam will just run through our closing karakia now.
Yep, I'll deal with the closing karakia as well. One moment. Cool. Kua e te kaupapa, ka rea ngā hua, ka rere ngā arawai, kua mo te mātauranga, hei arahina ngā mahi o tōtu te whenua, kia tau te ranga Māori e, kia runga e a tātou katoa, o me hui tai kia. See you, everyone.
Kia ora.
Thanks, everyone.
Cheers.